And one of the major trends that I see driving this is central bank money printing. Now, as the Fed probably cuts at the end of the year, the PBOC is doing triple R cuts, ECB is going to have to continue LRTO and all these programs, this money is not going to make its way really into the crypto ecosystem until it finances more money-losing startups like Uber and Lyft and all these massive public companies. Once people get done with those, then they'll move down to the crypto ecosystem, and that's where I see Q1 2020 is when we really start getting the upward cycle.
Institutional money or retail money?
I still think this is a retail-led phenomenon. If institutions cared about Bitcoin, they would be trading on the CME. The CME would be destroying volume for all the other exchanges. That's not happening. The institutions aren't here. There's no real clear value proposition. Goldman Sachs doesn't have a bunch of retail customers in South Korea, right? So why would they go and spend the political capital and the money to staff a trading desk when they can't even trade with the people trading crypto today?
Welcome to the Crypto Teacher, and guys, please like and subscribe. If you do like what you're listening to, please inform your friends and family. Also, spread it on social media. It's imperative that we get back to learning finances and understand how the world really works, because once we understand how the world really works, we understand everything is planned out. Now, guys, of course, we're going to get into Bitcoin first. Right now, Bitcoin, of course, is steady right now. Basically, don't forget the indicators. We have XRP, we have stable coins, and of course we have volume, and then also the repo market. Now the repo market is telling us, so that's the reason why I keep posting it. The repo market is very, very important because we know the only thing that's holding us up right now is the Fed. The Fed is holding the stock market up, and it's holding the crypto market up. We can see that with the stable coins. Remember, I posted Binance got $300 million after their upgrade. They sent them $300 million. So, guys, make sure we are sticking with the fundamentals. Now, I receive a lot of comments. I constantly see comments about XRP and emails. So they ask me, okay, when are we going to be moving up with the rest of the alts? Why are we falling behind? So, guys, let's go back to March. Basically, when XRP was doing the same thing, lagging behind. What happened after BOC? It went down. After CME, it went down further. But guys, remember what I tell you. Make sure we're looking at our dates. XRP is being used by BitMEX. So don't forget about that. Derivative trading. Don't forget about the swaps. Don't forget. So the fact is that they need, of course, Bitcoin as collateral. But that's when they start, buying into XRP. So the fact is, XRP is going to take that move up on the 6th. Don't forget that we have the repo on the 7th. So that means all the cryptos are going to go up. And of course, but XRP always gives that signal when we are going to go up. So XRP will go up a couple cents like it normally does. Nothing big, but of course, it'll go in an upward direction and going down like it's been doing. Now also, just getting into regular Bitcoin news, we had Bolt Labs creating the private solutions on the Tezos blockchain. Now guys, it's the same thing that I went over with JP Morgan, creating the ZK channels as far as creating the Federal Reserve 2.0 on blockchain. So therefore, it's a private exchange. That's all it is. And that's going to be very, very important. These privacy coins, these private, blockchains, it's going to be so important because not everybody wants to make a transaction where everybody can see. And then also we have India creating more apps because of the Supreme Court decision. Guys, remember, this is all a global effort. Same way the C word is, all the countries shut down. Remember, the only reason why we had the C word is because they had to stop the physical printing of money, the physical money. They can do everything digital. Digital is, it doesn't affect them. But when they have to have physical cash, they had to shut the globe down in order to get the repo market under control. So that's the real reason why we have these lockdowns, guys. Don't forget what the NWO believe in. Never ever let a crisis go to waste, because you can do things that you never could have done, and we can clearly see what's going on right now. They have totally changed and moved into a whole nother different paradigm shift. But guys, that's all I have for you. Don't forget about the books, Cryptoteacher NWO book. I want to thank those who donate to the Patreon, Cash App, Also, don't forget about your cryptos. If you're new to cryptos, Coinbase, Bitrue, Binance, the links at the bottom. Also, you have your stocks, you have your cobalt, your chip stocks, your gaming, your banking. Also, guys, everybody, of course, is sitting at home. Don't forget about those stocks, your biotech stocks, and because everybody's getting a free check, don't forget, what are they doing? Sitting at home, drinking, smoking weed. Don't forget about those stocks, and y'all have a wonderful day.
That's been something that's really added to the security of the exchange as well.
Yeah, it's easier to manage one wallet rather than, I don't know how many, Binance, some of the other competitors who have all these different altcoins have to manage all these different blockchains. They're obviously all not up to the same standard and robustness as the Bitcoin blockchain. So in terms of the technical workload and securing one asset, I think it's been definitely an advantage of ours.
Yeah. So what about, I think you've had some interesting comments in the past about some of the competitors in the space. How do you think about the competitive landscape today?
I mean, I'm on good terms with all of our competitors. I think I was playing pool last night with one of my other derivatives competitors, and I like everybody. And I think that it's really cool that everyone's taking different ideas to get to the same point, building liquidity for the market, wide breadth of financial products. Some people do different things differently. Fine. I have no problem with it. I think it's good that, at least in the derivative space, there's a lot of attention on the different companies, and we learn a lot from everybody else in the space, and obviously everyone learns stuff from us as well. So I'm actually very happy about the quality of the competitors that we have in the space.
Yeah, no, and I like that approach and mindset. For the past couple of years, I've been trying to stress to a lot of people that this has a chance to be the greatest non-zero sum game the world's ever seen, right? And so it's exciting to be part of an industry that's growing like that, but also where you have real cooperation and kind of friendly competition with a lot of firms, much different than the traditional banking and finance environment.
Yeah, definitely.
And so what about the markets in Asia today, like that you think are vitally important to kind of understand for the community here about what's going on out there?
I mean, China, Japan, Korea, Russia really is Bitcoin, in my opinion, in terms of trading volumes. They determine what the setting clearing price of Bitcoin is. They might own most of the mining gear. These are the traders at the margin who trade a lot. And there's various reasons for that. But at the end of the day, there's a very big trading culture, especially in Asia. And a lot of people see this as one of the only places where they actually have a chance at making money. Because if you want to trade on some of the larger exchanges, the notional value of these contracts are so high that you need to be a very large hedge fund to actually afford it, or you need an ISDA to actually interact with a bank to trade these types of derivatives. So I think the fact that there's a lack of financial products on the retail level, or even on the pro trader level in a lot of these countries, has made them gravitate towards trading crypto, and that's why you see the majority of the volume happening in those regions.
All right, and now what about, as you've kind of built up the war chest a little bit and started to get into some other activities in the space and start to be more active on the investment side, kind of how have your views and kind of thoughts shaped where you've started to allocate capital in the space?
Yeah, so I'd say that the BitMEX Ventures team, we're really focused on emerging market exchanges. So we've made investments that have been publicized in Taiwan, Philippines, Middle East, and there's a few more that are coming out in different countries. But essentially, these are places where you have a young population who doesn't have an affinity for a large multinational bank or brokerage house. And so if you have a digital-first exchange offering a very compelling product and good customer service, these people are more likely to put their money with that platform than, say, a Schwab Asia localized version. I don't remember when the statistic is from, maybe 2018 or 2019. There's an exchange in Indonesia, I think it's called Indodax now, and they have more registrations than the national stock exchange. Indonesia obviously has a very young and growing population. So that's something, a core area of investment that we see is, digital asset trading, whether it be Bitcoin or other cryptos, and investing in those platforms and helping them grow and, grow in the right ways, get to profitability so that there's more distribution channels in those markets.
Mm-hmm. Yeah, and actually, I was just talking to Meltem yesterday about Indonesia, and I was thinking back to the time in Hong Kong, and Indonesia is one of the most restrictive currencies in the world, the rupiah, right? And so when you think back to all the dynamics and the differences between the FX markets across Asia, when you have a lot of restricted currencies, right, that's what's led a lot of the people in those countries to get into Bitcoin and to look into digital currency. So now I have to ask you this: as we think about kind of the future of the space, wanted to just get, if you're comfortable, put a kind of some price predictions out there, and just other stuff you're excited about. You mentioned options, and kind of what else you think is going to be important developments in the space over the next 2, 3, 5 years.
Yeah, I think obviously the companies in the space are maturing a lot, and so what used to happen were a lot of companies took all their retained earnings and they held Bitcoin or crypto. And a lot of them found out the hard way that's really, really bad to do when the thing drops 80% and you can't pay your staff and you have to start laying off people. I think that people are getting a lot smarter about how they manage their cash flow. And once you start getting smart about managing your cash flows, then you start becoming more receptive to some higher level types of derivative products, optionality, structured futures products and sort of things like that. So I think miners, some of the other exchanges are going to start getting more into how do I smooth out my cash flow volatility? And that's going to mean some sort of derivative solutions. I think, and that's the component that's really going to lead to volume leaking into the vanilla options space. I don't really think that the screen options space is going to be the first thing that's going to develop. It'll be on the back end where you have people who finally appreciate the need to hedge future outcomes with these sort of derivatives, trade these things in size in the OTC markets, and then those brokers sort of filtering that stuff down to the vanilla screen. In terms of my 2020 price prediction, I think I'll keep constant 20,000, all-time high. Get back up there, keep people happy. But yeah, I don't know.
That's a good and safe one, but what I've thought about is as soon as we get close to that level, I don't see it stopping there.
Right. It's going to be one of those levels that it'll stay there for a while. It'll be very tricky to push past, but once it does, it'll be explosive because at that point, then there's a lot of people who were underwater for 2 to 3 years. Now they're feeling happy again. Now they're ready to spend money on different types of projects, take more risks in the types of things they're investing in this industry. So, people spend more money when they're happy.
An important thing about that I'd like to clarify too, I actually would make the case and argument that I don't even really look at 20,000 as the real high. I look at it more as a blended price of like 15K. Right? Going back to the finance days, I like to think about kind of VWAP prices and average price over a period of time. Bitcoin only traded above 15K for a couple days. Right? If you look at December 2017, January 2018, during that period, the average price was somewhere between maybe 12 and 13K. Right? So that was the average price that people got in. And this summer, we got close to that price level, right? And we're testing it. So, when you get close to testing those price levels, same thing like you said, people are back to flat. Anybody who had bought and is long is back to flat or profitable on their investment. And so, that's when they start to look at other stuff in the space. Arthur,